Welcome to another episode of Stock Talk. My name is Aman. I'm an investment coach here at Sage Investors, and this is episode 40. And today we're going to talk a little bit about consensus. One of the things I'm always looking out for, besides analyzing companies and evaluating companies and stocks, is looking at market psychology of other investors, because it plays a really important, it can provide some really interesting clues into where the market's going to go into the future. And every couple months, on my website, sageinvestors.ca, I blog some of my random observations where I see elements of consensus out there, and use them as kind of as cues to decide whether I want to go into buying or selling stock. So thought I'd share some of my latest observations that I've come across in the last couple months. But it's interesting, you can actually kind of break down the moments of consensus thinking. Basically, there was a time before the Brexit vote, if you remember. People remember what Brexit was. And the time after the Brexit vote, because the psychology of the markets it was like literally a tale of two cities kind of vibe going on. So before the Brexit vote, a couple of things I noticed out there in the marketplace was it was pretty much a giddy time for stocks, and it was almost got giddy to the point where there was a period where stocks actually didn't go down for almost 41 straight days. It was like 41 straight days of of rising stock prices, and that's unbelievable. It's one of the longest streaks we've seen out there. If you looked at consensus market psychology kind of posts, one of the ones I go to all the time is the CNN Money Magazine Fear and Greed Index, which takes a whole bunch of market technical indicators and compiles them into an index. And it's basically, it's sort of like a dashboard telling you whether investors are really feeling really greedy or really fearful. And during that time before the Brexit vote, actually on June 7th, the Fear and Greed Index was posting a level of 81, and 100 is considered super, uber, extreme greed, and 0 is extreme pessimism. So the market at the time, investors were feeling really good about stocks at the time. 81 extreme greed is just crazy high, a level of exuberance out there for stocks. At the same time, I came across an interesting research post that talked about during that period, investors were holding cash for the highest level since almost 2001. So it's interesting that people were really feeling positive about stocks, putting their money in the stocks, but also people were still kind of like, okay, something's going to break, and a lot of people were hoarding cash. So it was an interesting dynamic, but overall the net sentiment at the time was very positive. And for me as an investor, when I see people being really positive about stocks and positive about the markets, that's usually to me a bit of a red flag, and something's going to break to kind of stop the momentum. And sure enough, we got Brexit on June 22nd, and literally it was just the market just like almost did just a total 180. Before then the market was just all nice and happy. Literally after that vote, and especially the 2 days after that vote, it was sheer chaos. I mean, you just pick up the newspaper, just read, go on Twitter, and you were seeing articles and postings talking about chaos. Chaos was the biggest word. I remember one article talking about front page news, the biggest head fake in history. World is going to feel shocks from the Brexit vote for decades. It was just sheer fear out there, because it was like, oh my God, what's going to happen when England leaves the EU? It's just going to be the whole thing's just going to fall like a house of cards. Gold since then has just surged since that vote. And the Fear and Greed Index that I was talking to you about, which was at 81 before the Brexit vote, went all the way down to 49, which is neutral, but the move down was quite violent. So it's just interesting. As an investor now, when you're seeing those elements of fear and chaos and those kind of verbiage getting thrown out by analysts and all the smart money people, the normal tendency for us to behave is to just panic and just sell everything and head for the hills. But again, if you're aware of what these consensus points, good and bad, are, they can be cues into taking the other side of the trade and actually profiting from it. So at the time, and I've talked about this in some previous episodes, at the time after the vote, I wasn't looking to sell anything after the vote. I was looking to buy, and that's what I did. I added to my existing positions. And sure enough, a couple of days after all the chaos and mayhem in the stock market, crapping out and all that stuff, back to normal. We went right back to almost pre-Brexit. And literally all the losses that were incurred during that time have been made up, and more than made up. We're like hitting record highs again on a daily basis. And so literally, the message here is it's really important to understand what the consensus is thinking, because and more importantly, when you understand what the consensus is thinking, just basically avoid it and not follow it and not kind of like be a bandwagon jumper, because then you're setting yourself up for a lot of pain. So if you had followed a lot of the consensus thinking and what a lot of the analysts and pundits and all the smart money people were telling you to do, like before the vote, they were saying, it's no big deal, nothing's going to happen. But if you understood that, you know what, you might want to be hedged in case something happens, you probably would have kept your losses. But then after the vote, it was a great buying opportunity. And if you were aware of that consensus mindset, you probably would have taken advantage of it and exploited it quite a bit. So it's just something I really try to keep a real close eye on to, as far as, I'm analyzing companies on a day-to-day basis and I'm analyzing stocks. But I'm always keeping my eye on what the psychology of other investors are, the psychology of how the market sees it, because it really gives you some interesting cues into how to make investment decisions, especially in the short to medium term, and how to frame your portfolio accordingly. So you can read a little bit more about it on my blog, on my website, www.sageinvestors.ca. More info on that. And that's about it. So that's all I want to share with you. If you have any questions about this, about consensus, if you've seen any moments of consensus out there where people are so convinced one thing is going to happen or one thing is not going to happen, feel a shout out. You can tweet it through my Twitter account. My handle is @SageInvestors. You can follow me. Where I comment on items of consensus and any other market observations I'm seeing. And look forward to hearing from you. If you have any questions about something you wanted me to talk about in terms of another investment concept or something like that you're seeing out in the market, give me a shout. So that's all I got for you. That's another episode of Stock Talk. My name is Aman of Sage Investors, and we'll catch you again another time.